Welcome back to Kryptolytix, giving a fresh take on crypto analytics. Today we're going to do a market update. Bitcoin just cracked the 50K mark, so let's have a look and see how it's all going then, shall we? Okay, so look at this. We've hit 50K. It was only a matter of time, to be honest, and it's definitely welcome to see. So I posted a series of Bitcoin charts recently on my X, so I actually just want to go over them in this video and cover a few of the things that I'm seeing here now, and also compare where we are now to where, with regards to the current point in the cycle compared to previous cycles. And I'm going to look at some of the potential upside that we still have for Bitcoin, and I'll just break it all down then here. So what we have here, I'm going to start off with the weekly chart for Bitcoin. This is my cycle chart, so cycle analysis chart, where I kind of like to stop and have a look and see generally where we are before zooming in and, really digging deep on price action and all that sort of stuff. So we'll just explain a couple of things I've got on the chart, which if you've watched any of these videos before, you'll probably already know what a lot of these things are. So the candle color is my Kryptolytix BB trend trader. So this sort of shows the current trend for Bitcoin. And you can see I've also got a volume profile on there, so you can just ignore that cloud there. That's just to try and work out what the point of control is and sort of value area and stuff like that. So you can just ignore that for now. I'll just hide it. And I just measured it from the last halving, which was in 2020. And the other thing I've got on the chart here is the smooth moving average VWAP bands, or the SMMA VWAP bands. And they have also helped in the past to work out where the tops and bottoms are in the current market. And also they help work out if we're in full bull or still working up to full bull in terms of the bull market. So those are the two main things at this point that are on the chart. And we've got the market structure as well, which is showing, if you've got a lower high, lower low, and that's the bear market, higher low, high high, higher low, high high, that's the bull market, or at least this stage of the bull market. I've also put in the halving lines as well, and I've got the current price for these lines at the top. And these horizontal lines here are inefficiencies for the past cycle. So so if it's like wicks, the top of order blocks, all that sort of stuff. And you can see, like, generally speaking, with regards to these inefficiencies, like you could put one here, for example, and you can see it took us about 196 days to actually clear that level. So the next one is actually here. We haven't closed a week yet above here. So we still have a whole week to go to see what's going to happen. So we could actually just roll back over and then just have a wick like we did last time we entered the band. But, I'm not saying that's going to happen. I'm saying that's just a potential. But if we get a weekly candle close in here, then there's a very good chance that we will reach the top one here, which is the next block, which is these wicks up the top here and also right there. And that also lines up with the top of the VWAP bands. So that's what we're looking at on the chart, just so you understand. There's also a risk index down the bottom there. We don't really need to focus on that right now, so that's fine. I'll just collapse that, get rid of it off the chart. Now, let's have a look. So we are pre-halving currently with regards to where we are in the current cycle. If you think about Bitcoin in the 4-year cycle, which still has played out, even though, there was speculation that the 4-year cycle is done in 2021 and that sort of narrative started to fizzle out. It's kind of back again. I think people realize that the people who really hold the most Bitcoin, they like these cycles. So I suppose they're just going to keep, using it and kind of working in the same sort of way. Kind of like how the property market works in cycles, Bitcoin works in cycles. It's just a lot faster than something like the property market. So let's have a look. So this is where we were. We'll have a look in 2017. So this is the start of the bear market here. So we broke down below the SMMA VWAP bands, and then we put in a sell signal on the Kryptolytix BB trend trader. Also, if I reveal the bull market support band, which might be helpful, we can actually have a look. They actually work in tandem almost, these two indicators. Because once it's above, then it goes bullish. Once it's below, then it closes convincingly below, it turns bearish. But just so I can cover the SMMA VWAP bands first, we'll just hide this and go from there. So as you can see here, when you're above the SMMA VWAP bands, we're in full bull territory. So we actually did get rejected. So we spent like a couple of weeks above it in the cycle prior. So in 2016, leading up to the next bull market, which was this parabolic up only phase leading into 2018. So absolutely insane that this is the sort of thing that can happen. The returns are very much diminished now, but we can still see similar kind of price action, especially with the ETF inflows, because we've got trillions of dollars in assets under management now, and they don't have it and they want it. So we're going to see probably parabolic price rises at some point in the not too distant future. But let's have a look and see what could happen between now and then, because I believe that the top of the next bull market will most likely be at some point next year. That's just my speculation. Whether it happens or not, who knows, right? But we can all speculate, right? It's all part of the fun of doing technical analysis. So we can see in the last cycle, we had that run up to the SMMA VWAP bands. We couldn't quite hold above it, and then we were rejected. We actually we did go back below it, but it was pulled back into the band. Now that's very bullish. It's a sign that anything under here was now support, which means that we are pretty much in full bull. We sat inside the band, and then it acted as support all the way to the top. So you can see we came into the band, supported, went back up, higher high. You can see there's the higher high. There's a structure there. Back into the band, acted as support, higher low, up. And you can see these lines on the chart here. These are actually Elliott wave kind of waves. So they kind of work out, generally you get the 3 rises, or the 5 points, I should say. So it's 0.1, 2, 3, 4, 5. Sorry, got ahead of myself. But that's what these lines are, if you're wondering what they are. And the correction usually is an ABC. That's your 3 points to the downside. And then we start the next phase. I've actually hidden it in the current cycle. So I've just got it here. So I wanted to clean the chart up. But anyway, so once we get above the band, it is full bull. Like there is just no stopping it. Essentially the band now acts as support. Generally before the halving though, we might actually get a fake out. So we might actually come above the bands and then we might pull back into it. And if we hold inside the band as support, then we're on. And there's a pretty good chance that this is going to happen anyway. But that's just how I sort of confirm that yes, we're in full bull and it's time to sit back and enjoy the ride, because hopefully, at least in this case, you've accumulated your Bitcoin down there and you're just watching and maybe scaling out and taking profits on the way up. And the same you could say for the next cycle. So the next cycle, which was 2019, which was basically kind of like where we are now, but it's been kind of condensed because the halving is coming up really, really soon. So, but we can still look at price action and make comparisons. It's just like where it is could be different in relation to the halving. But, you could see in 16, we had the pullback just before the halving. So, we can just condense this, pretend like, it could be like this, and then you ignore the COVID business. So yeah, anyway, we can see that once we lost the SMMA VWAP bands, and the bull market support band was down there as well, and the Kryptolytix BB trend trader, and we had a pi cycle top, and just the confluence of indicators were just out of this world. This was just the top, absolutely the top. And then we ended up going to the bottom SMMA VWAP bands. Technically that's the mid band, but you actually don't see the bottom band at all ever. We won't see that for another few years yet, because this is the weekly chart and it's smooth moving averages, which means it requires a lot of data to even get a print on the lower band. So we still don't even have a print on the lower band. There are 3 bands in the SMMA VWAP bands. So we are not that mature yet. We're still young. We're still early, right? So what we did is we went to the bottom. We also put in a pi cycle bottom. That worked perfectly. And then we made our way up to the top of the bands. Compared to today, well, we're on our way. We're pretty close. So we're doing the exact same thing as last cycle. So we got to the very top of the bands, which was 13,500 on Bitcoin. If you're capo, you still think we're going to hit that. I don't think we're going to hit that ever again, personally, unless there's a black swan event that's just out of control. It's just something beyond the realms of what we've had before, essentially. That's potential then, for sure. Yeah, I would say there's potential then. But as far as I'm concerned, without anything like that, that's just not happening. I don't believe. But anyway, I could be wrong. Of course, this is all speculation. So we can ignore this, to be honest, because what I believe is that we would either just kept ranging here, because it's a pandemic crash, or we could have come down a little bit more, maybe down to here, maybe not as dramatic as hitting the bottom of the band, and then recovering from there. So I've also got this little cloud underneath price, and that's the super trend as well. You can barely see it on here. And bring it up. What I like to do with my long-term swing trading for my BTC hodl position that I actually trade is I'll take the first signal. Either it's a super trend or it's the BB trend trader. Whatever's first is the one I take. So that's why I've got both on my chart. And if you can't really see the plot's background, it looks like this. It just sits above or below price, depending on what the current trend is. I'm gonna get that off because it looks horrendous and it's very distracting. So once we're above the SMMA VWAP bands, it's full bull. That's pretty much it. So We aren't there yet. We could be here, but we're pre-halving. So I believe we're here. I believe we're here, but we very well could be here. Because if we're here, then it's full bull and we're just going to go up from here. And then wait for the next time we pull back into the band. The band barely even acted as support in the last bull market, but we're getting nicer structure in this bull market. So I believe it'll be like more like this, but more mature, as in less spiky and more like up and then trend sideways, range and then up and then trend sideways and then sort of range and then maybe enter the band and then up. That's what I think we're going to do, because literally if you have a look at this year's price action, it hasn't mirrored anything from previous cycles because we're not getting these massive blow off tops anymore. It looks very mature, right? We're getting this up and then so it's contesting with these levels, ranges, and then well, if we're in price discovery, obviously this is not relevant, but we're just having a look here anyway. But we moved up to this order block here and wick to act as resistance. And then essentially then we went up to the next step, which was here. And we just keep ranging and then we do a next big leg up and then we range and then the next big leg up. Maybe we'll keep doing that. And if we do, then that could be kind of what we're looking at for this current cycle. Because you can see some of the telltale signs of how price action will work based on price leading up to it. So you can see that, for example, these blow off tops kind of started diminishing here, right? Have a look here. This is kind of smooth kind of price action. What do we get here? 2 smooth tops, right? I mean, if you have a look in the prior cycles, you get these big spikes, big spike, big spike, big spike, right? You can see it starts to smooth out here slowly, but yeah, this is sort of a telltale sign of what's to come for how price action will operate. So if that's anything to go by, then yes, I believe that we probably will look more like this for the rest of the cycle, where we get this range and then we get this big spike up and then we get a range and then we get a big spike up. So anyway, back on task. So what does that mean? So if we are here, which we still very well could be, where we're reaching to the top of the bands before a brief period to the downside. I remember even 2016 had a brief period to the downside. Will we go to the bottom of the bands again? I don't think so. We might, but the bottom of the bands right now are sitting at 18,000. I just don't really see that happening. They are very, very lagging. So they're going to take some time to really come up. The only way I think we come back down here is Black Swan. Otherwise, I don't believe we're going to get back to the bottom of the bands with this like whole second scare narrative. The other thing as well is we did have a second sort of dip that was lower than the previous in 2015. And we got lower in the band. So, in the next cycle, which was 2018, 2020, we did get lower in the bands technically, but we did not put in a lower low. So even if we get lower in the bands, well, we got to the absolute bottom here. So you really can't get any lower than that. So I think the absolute bottom of the market right now, in my opinion, is 17,000. I just don't see that happening unless there's a crazy black swan. Even if a recession, they don't even want to announce a recession in the US, because it would be bad politically. So I think they've just moved the goalpost to a point where they can just like never announce it. And so I think that's probably going to be taken off the table. That's just my opinion. So if we are here, then, there's a good chance that we still might come down at some point. Where from? That's the question, right? So that's what we don't know yet. But if we do 2016, then we just come basically back to here, like 47K, and then just rocket boosters essentially after the halving. So, where could we go from here? We've got 2 resistances above. We've got these 2 lines here, which are again, these structure sort of highs here, weekly structure highs from previous cycles, or the previous cycle, because we didn't really get up here in the cycle prior, obviously, because this was price discovery. But you can see this was support, resistance, kind of like a mini head and shoulders here. And so we've got this one here, which also lines up with the middle band of the SMMA VWAP bands. We also have this one here, which is support, resistance for this structure here. And that also lines up with the top band as well. So we have a little bit of a confluence here. Now, could we keep going up? Absolutely, there's a possibility. I mean, highly probable at this point. Have a look at the structure. We have high highs and high lows. So what does that mean? Like, we're in an uptrend. So generally speaking, we'll get trend continuation, right? Unless it's proven otherwise. If we get a break of structure down, and we start putting in lower highs and lower lows like this, so we get a break of structure here, and then we start putting in lower highs and lower lows, then well, yeah, then that's a bearish structure. This structure here is highly improbable at this point, but that's what I'm talking about here. So we're in an uptrend. We got higher lows, high highs, and that's pretty much all we've been doing all the way up. So these are my current targets. So 56, 656, 52, 623. Those are the 2 top bands. And if we keep going and we come up into that and we get a pullback, let's see what it would look like. I guess it would probably be around, I guess, right here, if it's pre-halving. Top to bottom is about 20%. Does that sound familiar to you? Look at this, from here to here, about 20%, here to here, about 20%, here to here, about, well, that was about 30%. A bit of it, there was an event there though, that created a little bit more downside pressure, but you can see it was bought straight back up, essentially. So 20% corrections, that's not crazy. That's pretty standard, and that's happened a lot recently. So if we do get to the top band and we reject from there, and we come back down to here, like within 2016, then that's normal. And that's pretty much what happened back then. What would it look like if it did what we did back in 2017? I really don't think that's going to happen, but that would be a pullback to, absurd, 217% move to the downside. I don't think so. But one thing we can do here is we can look at probably, if we do get an aggressive pullback, where's the highest probability point that we'll come back to? Well, it's still probably sitting at around 32K, somewhere like that. That's major support there. That would be a break of the structure though, so that really wouldn't be that good, but there is always a potential that could happen. Enough of that one. Now, the next chart that I showed was the logarithmic regression chart. I'm going to turn the support band on for this one, so we can also have a look at some confluence. So this is the logarithmic regression channel, and you can see since the end of the bear market, which was in November 2022, we have been stuck in the green channel. So probably barely see the green line here. So maybe I will make that brighter so we can see it. So you can see these are based on Fibonacci levels. So each line here is not only a logarithmic regression channel, but it's also a logarithmic Fibonacci level as well. Cool. So you can see based on this log regression channel, we have been stuck in this green band, which is actually technically the buy zone. That's what the green band means. It's like, this is like where you can buy and accumulate Bitcoin. And the next band is, cool, we're good and ready to go for the next part of the cycle. And this is where things get pie in the sky. When we get to the top of the band, like we did last time, top of the band currently is sitting at 192,000. Again, like crazier things have happened. Now, with regards to the last cycle, I did have to curve fit this, and you have to curve fit this every cycle, which kind of sucks because I did have this lined up to the bottom. But now we can look at this being the bottom essentially of the last cycle, and then still the top of the band was the top. So now it's been curve fit to the current cycle. So this was the top and this is the bottom. And when I had this curve fit to the prior cycle for this one, for this particular cycle, this acted perfectly. This touched the bottom with precision and came straight back up. And it was like the perfect spot to buy because it was curve fit to the previous cycle. So you always have to curve it, log regression channels to the previous cycle. Otherwise, you don't have anything, you don't have the proper data to work with for the next cycle. Now this changes, this value, these values will change every week, but you know, we've got the sort of top band starts at about 130,000 and goes up to about 200K, which, you know, that's actually a pretty standard thing you will hear with regards to price predictions for Bitcoin. I think that we won't hit the top band personally. We'll probably come more to some of these bands, in my opinion. Let's just say it could be like the end of 2025. So what I got here, and this is measuring previous cycles. See these bands down the bottom here. This was the estimated bear market duration, literally captured from the prior cycle. Look at that, it was perfect. So that was the top and that was the bottom, called with absolute precision. So this band here is if it was the same cycle. So same duration from the previous cycle in terms of the bottom to the top. So let's have a look and see. That's on October. Let's have a look and see. That's sitting at around, wow, $367,000. I mean, you know, I want to be a moon boy as much as anyone else, but that's pretty extreme. What's this red line here? Oh, that's a Fibonacci. That's 2.236. That's a predictive line that I put in quite some time ago now. But if we go, this is measuring the Fibonacci extension from the previous cycle. If we do a 2 from here, that's over here. What does that line up with for the next cycle? The top, estimated top, be about here. That's probably lines up to about this part of the band. So this is this chunk here. Pretty insane. You know, I don't want to be a moon boy and make these crazy targets for BTC, but this is definitely a possibility that we hit something like this, you know, if we just keep repeating and if the log channel keeps working the way it has the last 2 cycles when it's curve fit to the prior cycle. Again, it's generally measured from the bottom to the top, and then you can see it just absolutely perfectly predicted the next one. So we are currently breaking out from this green band, but you can see we also did the same sort of thing back in January at the start of the month. So this weekly candle, remember, hasn't closed just yet. So what we did is we came to the top of the band and then we were rejected, came back down, came to the top of the band, rejected, came back down, top of the band, came back down, got above the band, couldn't close, and we just snapped back in. And then we came down, we dipped to the next level. Again, remember, this is a Fibonacci log regression channel level. And then we went up from there. So this would have been a great spot to buy at 39,662. Very, 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 very nice spot to buy. You can see it worked in the past here. So we acted perfectly as support, came to this band, and then we ranged between this band and this band. And then we made our way up to the next band, so on and so forth. And we just kind of ranged within there, came back down, touched the bottom level perfectly again. Look at that. That's just insane. Like, this just calls the cycle so perfectly. Like, if you had buy orders down there at 25K, good on you. You did all right. And you're currently doing really well. If you did, you're up 93%, which is really nice. So again, we haven't closed the week, but if we close the week above currently, I'll say 48,000, then this is an incredibly bullish sign, incredibly bullish. And that's unquestionable. So now let's have a look at the supports below, just in case we do have a pullback from here. Maybe we reject and we come back to the top of this band here. Sorry, to the band again, like we did last time, where we failed to crack this level. And then we went down to this band here. Well, in this case, we actually went to the bottom of the band. Let's have a look and see actually where we are at the bottom now. So if we did get an aggressive pullback pre-halving into the halving, then that's 34,000. That's quite low. It's not crazy though, because we have a 32K support here as well. So it's not crazy, but will we just keep bouncing back and forth here until we just start entering a parabolic phase? Well, there's a good chance that we do. So we have to consider everything and leave all potentials on the table. But I will probably discount the bottom of the bands for now, and we'll just go straight to here. So that's 37K at the moment, coming up every single week. Remember, this comes up every single week, moves up with price, or moves up with time, because it's a function of time. We also have the bull market support band here, which is the 20-week SMA, 21-week EMA, and that's sitting right here in this band as well. So here is an additional support. We do come back down. Next, we're going to have a quick look at the dominance chart, because, you know, what's any TA video without a bit of a reference to Bitcoin dominance? Bitcoin dominance is not super bullish, to be honest. This to me is a range. So we've actually been ranging since October last year, or even we touched the range, if you will, starting at 51% back in mid 2023 in June, but we broke above it, and it's basically just been bouncing back and forth between 51%, and altcoins are starting to run. You can see that little tail there is indicative of that. But yeah, as far as I'm concerned, Bitcoin dominance doesn't look super bullish. It's had a little run here, obviously, but it might be time for alts to take over, because we are descending here as well, technically. So there you go. Maybe this is the opportunity that altcoin traders are looking for, to switch some Bitcoin profits back into alts or something to that effect. But there's still a good chance that we get another push to the upside. I mean, who knows what's going to happen, right? One thing I wanted to bring attention to, and this is on the 1 hour chart for Bitcoin, on the Binance chart, is the open interest. So that's how many perps trades are currently open, long or short, doesn't matter what it is. This is the amount of money that's currently in multiple exchanges. The exchanges are Kraken, BitMEX, and Binance. So it's not everything. So, you know, obviously there's a lot more than this, but this is just those three. We're hitting some pretty crazy levels in open interest, which means there's a lot of potential for volatility when you get open interest this high, because what can happen is, you know, stop loss hunts, liquidity grabs, all that sort of stuff can happen when it's that high. If you have a look, since the lows in January, where open interest was sitting at around 3.5 billion, it's gone up 50%, 1.8 billion, almost $2 billion in open interest since the lows in Jan. That's some potential for some crazy volatility. The higher the open interest generally, the more incentive there is for market makers to take out this liquidity. So I believe that this reduction here is from shorts being liquidated or stopping out or closing their positions. In my last video, I said I have a short open for Bitcoin. That already stopped out. I'll show you why I entered that and where the stop loss was in a minute. I'm mostly long. In terms of my portfolio, it's mostly spot, and I just trade a small amount of it with perps and stuff like that. So I don't mind if I take a short and it doesn't pan out, because my spot portfolio is way higher than what I even touch with perpetuals. So it really doesn't bother me. If price keeps going up and I've taken a short, I'm like, doesn't bother me in any way. Although, you know, if you've been trading for long enough, generally nothing bothers you. Even if you win like this massive trade, you're like, cool, next. And if you lose a trade, you're like, oh, well, next. It's kind of how this stuff goes. You get very apathetic about it all. The longer you've been doing it for. And in my case, it is 7 years. Holy, I didn't even realize I've been trading for 7 years. Anyway, so in terms of the potential for volatility, it's quite high, in my opinion. candles are red, very red, which means that stochastic heat map is just pinned to the top here, but this can get pinned for quite some time. So yeah, the open interest is really the main thing on this chart that I wanted to allude to. And also we've taken out a lot of this prior liquidity. So this massive 15K worth of Bitcoin liquidity here has been taken out. So what do we have from here? Nothing recent. So at this point, it's just basically liquidation levels and stuff that are above. We have a lot of passive orders just taken here. If you have a look at mob chart, which is a order book based chart that shows, order flow, stuff like that, where people have got their sell orders in. This was huge, this amount of Bitcoin here. So a lot of people took profit at 50K, which is pretty standard. So that was just passively taken. Those orders mostly have been there for quite some time. We're building a lot of volume here. So we're creating a massive peak here on the volume profile on the side. We've done things before where we've come up to a new level, like 50K in this example, and ranged sideways, built a whole lot of volume. Once a lot of people commit to trades and get into positions, then we come straight back down here and take them all out. So there's a potential we'll just come back down here. Massive support here. You can see this massive spike here on the side. The volume profile, that means it's new support. So we might just come back in here and create a new range, but we'll have to see what happens because we do have these ETF inflows, which are big time. So if we just limit these levels to just high levels, these are what we have above. So we've got 51K here, pretty standard, and 52K. So just kind of round numbers, people are really putting their sell orders at. 210 Bitcoin worth of orders currently here. And this is spot Bitcoin. If we go to Binance Futures, this is all perpetuals. So we don't really see anything too aggressive here compared to spot. So we'll just stick to spot for now because it's showing much stronger levels. And this kind of lines up, this 52 also kind of lined up here. So you got a sell wall here, 52K. If you have a look back at the sold chart, I've just added the 200 period weekly simple moving average as well to the chart. So we've got a reference. We kind of got this 52K level, which is that order block there, or that inefficiency wick. And then we've got the middle band of the SMMA VWAP bands. And people have also put a whole lot of sell orders there. So we've got some confluence there at around 52K. So good chance we'll get another sort of pump up to there. It's another 14%. So if we just continue, which we may well do, then this 52K level has quite a lot of sell pressure sitting at around it. So maybe we just sort of range sideways here for a bit. And then if we do come down pre-halving, then either we do what we did in 2016, we just come here to the bottom of the band here, sit in there for a while, and then just basically climb back above it. Or we come down to some of these lower levels, which are massive buying opportunities at this point, to be honest. So I'll just quickly cover the elephant in the room. That's that short that I took. Now that stopped out here, which is pretty high above, about 48K in all honesty. But this is a strategy that I've been using for the past well over a year now. And it's been 82% profitable. So it's generally pretty good, but you do get this drawdown sort of stuff that can happen. And I'm okay with that. So it uses the cumulative volume index to work out delta shifts. And I just call it the pivot surge or the trend reversal. And it tries to work out when there are potential trend reversals taking place in the market. So, for example, we had this one here, which was pretty bad signal, but the one that followed was really good, right? So it takes up to 3 trades. So this was a short, built quite a large position, and that was profitable. So in this case, it stopped out. Stop loss is sitting at 12%, which is pretty high. So I need to make sure I got enough margin for that generally, which I do in my trading account because I use cross as well. And I had plenty of longs in here, so I didn't really care that this stopped out because I have a massive long position open for Solana. It's about 90 Sol. Well, it's not that big actually. It should have been bigger, but I only went 4x on that position, but that's fine. It well and truly made up for any of these losses from this. So it's kind of good to be hedged sometimes and have multiple strategies. So that was a cumulative index trade, and that was a loss there. That's fine. I don't mind. But I just thought I would address that since I did cover this in the previous video. And that's just the pivot surge. And maybe we'll get another signal. And if we do, I'll definitely be taking it because we're in some pretty high levels right now and coming into some pretty significant resistance points. In terms of Fibonacci extension, and that's measured from this peak here to the bottom here. So this is the Fibonacci's for this particular price range here. That's a 20% pullback, essentially. We've got the 1272, which is the Fibonacci on the extension side. So there's no 272 when you look below. It's the 236, but the Fibonacci extension numbers are slightly different to the actual Fibonacci levels because you got except for the 618, right? So the 618 is definitely in there. And the 1.786 is also the same as well. So at the moment, they are sitting at about 52K, about 53, 55, and 57. So this is your golden pocket. If we get to this sort of level, I mean, this is like pretty much near the all-time high. So, that's, if we do get up to that level, then there's a good chance we'll just break it and then start our parabolic run to the upside. But we'll have to see how that goes. We're going to have a look now at the 3D chart. It's a little bit more busy than the last, so I might just hide some things. So there's another regression channel as well. So this one is another cycle chart. And you can see why this move has been so aggressive. If you have a look here, we've got a trend line. Just hide the indicators for a sec. So these are the trend lines essentially. And we can see this trend line here that we started in the previous cycle. We had a rejection there, and then it broke it above it. It held a support there, broke down below very aggressively, which was a convincing break, retest, fail, retest, down. And that this aggressive move to the downside was just because of the failure to break above this again. You can see we touched here back in July 2023. And then once we came back above it, the expansive move was very aggressive, which makes sense because we've been trying to break this line for, at least in this case, when it actually broke, 745 days. That's, that's quite a while. So this is why the expansive move was just so aggressive. The median line of this regression channel, so this is a manually drawn one. I've mentioned it many, many times in the past. It was drawn at the previous cycle. Like I drew it in 2019. So it's been on the chart since 2019. I literally have not adjusted it ever since then. Have a look here. It touched perfectly, which was really nice. The median line is kind of acts as support and resistance at times. You can see I haven't need to curve fit this one at all. It's just been really nice. Look at this craziness. But again, it didn't touch the bottom of the 2012 market, but it's worked very well in previous cycles there as well. Top, bottom was there. So that was the actual pandemic crash was the bottom there. She didn't even get anywhere near that in the prior cycle. And then we went down into there as well. So, and you can see I've got Fibonacci's that I've measured to work out that's from bottom to top. So this would be from bottom to, who knows where the top will be. Top of this right now is 160,000. It's a lot more reasonable than what the other one was, that's for sure. 160K is a lot more reasonable. We go October 25. I actually need to extend these lines out. So I haven't even done that yet. The top is about 200,000 essentially, if you do sort of roughly work that out. So the median line it almost hit the median line here on the 10th of Jan, but it didn't quite get there. Median line acted as support there, and that was on the 7th of May 22. So that was a bear market. You can see it skirted off there, and this is 2020. So it skirted off there, sort of acted as a resistance in the lead up to the last bull market. So it's not a bad level, right? The median line for this log regression channel. And I calculated this median line back then to work out what the most accurate path should be. We're still not above that median line, right? So we're bullish. Things are super bullish right now, yes, but we still haven't really got above the median line yet. And if we have a look at the prior cycle, we can dance around the median line as well before breaking convincingly, but we're still kind of here, essentially. The interesting thing though is we actually got above the median line in the last cycle. That's because we didn't come down as aggressively as we did top to bottom in the most recent cycle. That's because we had FTX unwinding, Celsius, Lunar collapse. We were bruised and beaten big time in the last market cycle. So we came down a lot more aggressively than what we did last time. It looks kind of gentle and a bit more controlled, but it was a lot more aggressive, I assure you. Even based on fibs alone, we only came down to the 382 in the last cycle, or the one prior to 2022 sort of bear market, we actually came down below roughly the 0.5. So that's pretty significant. It broke into an entire new Fibonacci level. So that's some very aggressive selling pressure, right? But yeah, so we're not above the median line just yet, but we did come down a lot more aggressively. So, for example, if the median line was here, then we've come above it. If you could say that's a channel like we did on the previous one, then we are above the median line. We held it as support. We're going above. That's only because the sell-off was so much more aggressive and we hit another Fibonacci level. So this is calculated based on Fibonacci's. So that's the reason why it is where it is. And because we went down an entire another Fibonacci level, it's obviously going to be lower at this point in the cycle. Next, we're going to look at the Aggr trade chart. And this chart here I use for the SMA VWAP bands, which is just the simple moving average VWAP bands. And the stochastic heat map I really like on this. I want to see this reaction here because this was really helpful to kind of work out the second top, because this second top was just absolutely bang on. And these SMA VWAP bands were working really nicely as like points that price supported. You can see it actually acted perfectly there, but it just entered a range and then went down below. So when then we squeezed into them there, bang, then we went off. And you can see we touched there or held a support and then came back up. Then we went to the middle band, rejected, and then went back down. So these act really, really well. I really like the Aggr trade chart for these particular SMA VWAP bands. But when we get above these bands, this is generally the bull market. So if you can go based on that generally and just that alone, we have hit the bull market, essentially. We did ever since 34K. Because if you get above these bands and you hold consecutively above them, and they don't just sort of like, it doesn't just skirt around and dance inside them and then reject, then technically speaking, if you're going purely based on how you read this, then this is the bull market. That's it. That's all there is to say. When you're above these bands and you have been consecutively, even if you come down back into them, you're in the bull market. So this is the bull market. So I guess anyone who's calling for like 13K or whatever, they're not going to have a good time. NGMI, right? Price is inaccurate on this chart, just so you know. It's currently sitting at 50,130 at the time of recording this video. But we can go above the bands, and then they act as support, resistance finally again, and then we get another retest, and then we can't get back above them, and then we can get rejected. So I can't really show you any further back, unfortunately, because I'd love to see what 2019 looked like, because that would be the most practical thing, because that's where I think 2020/2019 is kind of where we are right now, but I can't show you that. So all I can say is we have sort of come back inside the bands. Middle point is at 36K at the moment, roughly. We can just ignore the low of the bands. That's just, I don't believe that's going to happen. We've expanded. So when the top expands, the bottom expands out as well. But where is the top of the band right now for just the SMA VWAP bands, not the smoothed moving average VWAP bands, but the simple moving average VWAP bands, sitting at about 52,000 currently. Confluence with a number of other levels as well, including our mob chart. And of course, the top of the smooth moving average VWAP bands, which are sitting around here. We have our resistance levels all kind of mapped out. We've got this one here, essentially, which I wish it would expand all the way across. And that lines up to the top of the mid band here. This entire wick has been filled now. So this inefficiency is now been rebalanced. And we now have new support in this band here, essentially, which, you know, sitting around 36K. I mentioned 36K a number of times. So we got confluence with that being major support, and we got confluence with 52K being major resistance. It's my TLDR, I suppose. So if we do end up coming back in here, then there's some pretty epic buying opportunities, but we might only be getting these 20% pullbacks from now on. So, you know, maybe we have to come all the way to the top of the band, get a 20% pullback, which will put us here at the bottom of the band here, and then we just keep going up. It's a good chance that that'll happen. So, and you can see we gain these levels and then we range for, that was like 2 months. This one was actually ages, really, when you think about it. It's about 5 months to here, like 10 months, really, actually. I mean, the entire year last year was ranging. It reminds me of technically the top of the bull market in 2021. The whole thing was just ranging there as well. So they got trapped in like almost a year worth of ranging until it just broke out and went parabolic, which is pretty standard for Bitcoin. So maybe we enter another range up here and then we come in sideways. Well, yeah, we'll definitely have to see what happens, because a pre-halving dump, as you saw before, is pretty standard, and it's happened the last 2 times, but 16 was not very aggressive. It just came back to the bottom of the band. And in 2019, it was a full retracement down to the bottom of these bands. So, well, that was 19/20, right? But with all these ETF inflows and all that sort of stuff, I just don't see that really happening. So all we can really do is buy whatever dips come along, because I think we're pretty much bullish. Like, it looks very bull markety to me. It'd be super bull market confirmed once we get above here and hold above here. That's when it's just like time for some parabolic rise. But, you know, we're not even after the halving yet. So, you know, we'll have to see how it all plays out. Anyway, I hope you found this analysis helpful. I just showed you a bunch of charts, really, but, you know, hopefully you could get something from it. And if you did, feel free to give the video a like, subscribe to the channel if you want more content like this, and hit the bell notification if you want to be notified when my videos come out. Personally, I don't really think that we'll be seeing things like this crazy capo prediction. He's still posting these charts. Bitcoin's pretty much about 36% away from its all-time high now, which that's pretty impressive. Like 36% is not really that much in the grand scheme of things when you think about Bitcoin. And I really think that these targets are pretty feasible in the SMMA VWAP bands. We've broken out of the log growth curves, but there's a good chance we could snap back in like we did back in January. We smashed this resistance here, so this is the next one over here. Open interest is incredibly high right now, so we have to really be careful for a potential flush out that could be on the horizon to take out liquidity. And that's the summary of my recent Twitter posts. So anyway, keep safe out there. This is Kryptolytix signing out. Have a good one.